With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, welcome to the COB this Tuesday afternoon. I'm Juliette Sarli. As we look at the local market joining in the global relief rally, what an impressive session we had on Wall Street overnight. On the, what some are calling, I guess, the temporary trade truce. We've got this 90-day reprieve between the US and China. We saw Japanese markets at a 3-month high, and of course our market joining in the buying as well. Let's have a look at where we are finishing up the session off the very positive jump that we saw on the open, but still an impressive 0.4% gain. When you look at the broader S&P ASX 200 index, up about 0.5% today, and really the likes of tech, which is similar to what we saw on Wall Street, and healthcare along with energy really leading these gains. Worth noting that we are seeing pharmaceutical stocks rebound from some of this heavy selling that we saw yesterday, because President Trump said he's on the brink of signing an executive order to cut US prescription prices. So the ASX 200 set to close at an 11-week high. That brings us to the themes of the day. It is all about the Swiss success, the Geneva talks, the temporary, as we mentioned, trade truce, at least for now, between China and the US. A lot of tech support as well. We've been seeing the likes of WiseTech, Life360, which came through with a positive trading update, hitting a record in trade. NextDC, all of those stocks being very well supported after the Nasdaq, of course, overnight had a 4.4% gain. But where is the glitch? Well, that's in gold. You've got Citi now downgrading its gold price forecast, expecting the price of the precious metal to hit $3,150 an ounce in the coming months, owing to the progress in the tariff negotiations. Of course, gold has been where everybody has been fleeing for a bit of a safe haven hedge. All right, let's have a look at the sectoral moves and start with some of these gold players. The likes of Newmont down by about 2%, Evolution off by 5%. And flipping it over to look at the upside that we saw in those tech players today, particularly, as I mentioned, the likes of WiseTech doing very well in the tech sector, up 5%, NextDC, they're up by 1%, and Zip up by an impressive 8%. In the healthcare sector, also some very solid moves, and one that is not on that screen but is worth looking at is Clarity Pharmaceutical, a very strong gain today, and this is, of course, as the president announces that he is moving to cut the costs of prescription medicine in the US, and energy stocks also getting a very solid boost today. Looking at some of the corporate stories, the Chilean state-run copper miner Codelco reaching an agreement with BHP to explore the Anillo mining property. Rio also doing well on this, because Codelco and Rio will jointly aim to create a copper mining district around their shared project in the north of Chile. Ampol shares up 1.4%, planning to divest Australian and New Zealand retail electricity business. Paladin, though, going the other way. It did record a $38 million loss over the first 3 months of the year. Abacus Storage King rejecting an unsolicited takeover offer from a consortium of Key Corporation and the US-listed Public Storage, which valued it at just under $2 billion. And then I was looking at PolyNovo, look at that, up 15% on the close. Its in-human study of its wound healing product NovoSorb, which treats and manages type 1 diabetes, has yielded a positive result. Let's drill more into stock specifics and the overall market momentum with our COB guest, Mathan Somasundaram from Deep Data Analytics. Good to see you, Mathan. So hope, a little bit more certainty, or perhaps is uncertainty still the name of the game?
We're in a reality TV show, so it's just another weekly volatility. I mean, China basically said they won't negotiate till tariffs get pulled down, and US did. US got nothing out of China, and they pulled down. But that was always going to happen. The 145 was, that was his fantasy stuff. Even if you wanted to decouple or bring back manufacturing, that was going to take years to play out. So you really can't do 145%. So everyone knew that would come down. It was just a matter of time. but the 30% is still 30%. And if you're going to have 30, even if you had 10% tariff, inflation is going to rise. So 30% is still high. It's just that the market was on a massive short position and it got squeezed in the US. So we've had a big bounce in the US. Interesting that we didn't get anywhere near that kind of bounce around Asia, even though there's been a few bounces. But there's some weird times because the bond yields are flying everywhere. And so there's a lot of contradictory signals. So we'll have to wait and see how things settle over the next week.
Yeah, indeed. Certainly not quite the impressive moves that you saw on US markets. You make a really good point, though, that even with 30% tariffs, even with the momentum that we've seen, where's Mathan gone? Even with the fact that we're not seeing the 145% tariff, we've still got tariffs of around 30%. All right, well, let's look at some of the other moves that we saw specifically into the session. Life 360, a lot of these tech players looking really solid, Mathan.
Yeah, look, I think the tech sector obviously is going to get a lot of interest when you've got NASDAQ jumping 4%. A lot of them have had a decent pullback. So you had a bit of short positions built into them, so they all got squeezed today. If you come up with a good result on a day like today, you're going to get double-digit bounce, and that's worked out for a number of them. The healthcare sector was quite fascinating because ours is probably not as affected, and we do have very good healthcare stocks. I mean, ours is probably better than most in the US. In that context, it's probably the only sector where we've got better companies than probably US. So I think that's relatively defensive, and our healthcare sector's had a decent pullback already. So that's a fascinating one to look at. I think if we get a bit more of a pullback in some of them, like, you're getting that pullback in the CSL, I think it's an interesting sector to look at right now. So I think that's an interesting territory. The tech, I think it's the growth stocks, right? If bond yields are going up, growth stocks are going to be challenged. And that's the problem here. You had a bounce in NASDAQ, and so did in the bond yields. So it doesn't add up. So the problem here is the US still has substantial debt problem, and bond yields are basically the bond market's going to attack. And I suspect in the next couple of days, you're going to hear more from the bond market because the latest tax policy that the Trump government has put up expects to push debt up by $4 trillion. So someone has to issue those bonds and someone's got to buy it, and the bond market is reacting. So I'd be a bit careful jumping into growth stocks at the moment because the bond yields are all breaking downtrends, just like the market. So we are in interesting times.
We are indeed in interesting times. And as we always know, Mathan, it is the bond market that certainly dictates what we're going to see later on in the equity market. Were you surprised by Citi downgrading its gold price forecast, or have you sort of been expecting that, given that we're seeing a bit more optimism? Maybe we move away from the likes of gold and gold players.
After working for more than a decade at Citi, I know how the big brokers work. The macro guy picks out the commodity prices every quarter, and usually it's after the cycle has played out, and you have a pullback. They're going to go negative. That's where they can lock in the profit. So I don't think brokers are going to be. I mean, it's obvious the brokers will downgrade in this pullback. We haven't had zero negotiation in trades, and tariffs are sitting at 30% against China. So I don't think the thematic for gold has gone away. I think, if anything, it's been a 2-3 year cycle, and I think there's a lot more to go. Where volatility is expected. Most mining stocks, gold miners, have moved in the last couple of years 100, 200%. So a 10% pullback is not going to scare anyone. The question is going to be, how does this settle? And I don't think anybody knows that yet. So that's where the interest for gold will sit. Bond market is moving, and the bond market is going to create, it's the god in the market territory. It controls everything. So when they're moving around, I think you want to hold on to your gold.
All right. What about travel stocks? Because, of course, we've all heard these horrible stories of people being turned away at the US border, even if they have holidays, cruises booked. And a lot of people have been downgrading the travel sector. Interestingly, Webjet today at a 5-month high. So some people hopping on to some of these sold down stocks, perhaps.
Yeah. Looking at the travel data into US, it looks atrocious. I mean, you can pick from anywhere, from Europe, from North America, Canada. You can look at it from Asia. The travel numbers are collapsing into US. So the tourism play into US is going to be pretty tough. I don't think that's going to go away anytime soon. So we're not trying to pick that. A lot of the airline stocks have had huge runs. Most of the travel related stocks have had pretty decent runs. I think the travel agencies, the online models, they've struggled, and I think logically that's still going to be playing out. I would be very careful trying to pick anything with consumer spending playing out, because we know that tariffs are going to be basically a tax on the Americans. We know that the tourism numbers are really weak into US, and that's a dominant market. So it's going to be a tough play. So I think inflation's still hanging around. I suspect inflation is going to climb over the next 3 to 6 months. I mean, US Fed has pretty much said that, irrespective of what happened in the last couple of days of pulling back to 30%, inflation is still going to climb. That means consumer spending is going to be tough. So I think it's a tough play in that sector. I think you got to look at the sectors that are going to do well in a slowing growth environment. That's probably going to be defensive, yield, things that benefit from inflation cycle, like supermarkets, like utilities, infrastructure, those kind of sectors will continue to outperform. I think the cyclical stocks are probably going to struggle in a rising bond yield environment.
Okay, well, we'll continue to monitor. Mathan, thank you as always. Mathan Somasundaram there from Deep Data Analytics. We touched on Life 360. That was the stock of the day. Its quarterly revenue and earnings both coming in ahead of consensus. So what do Zach Riers from Banyan Tree Investment Group and Jonathan Takadina from MPC Markets think?
With 84 million monthly active users, similar to your Twitter handle, Andrew, that's a good base to start off with. Reiterating their strong top line growth, which we expect double-digit growth for the next 3 years. If they continue to penetrate new markets, advertising catches up, we really like this story on a 3 to 5 year view. So we're happy holders and buyers of this. But we think there's a lot of directions that they go in. Again, comes back to that monetization of that subscription model. But right now it is for free. We need to see that more move towards paying subscribers.
I would kind of wait for a dip, a test of the most recent highs around, I think 27.70 from memory. Buy in at that level and then watch it go higher. So just for today, it's a hold at the moment. They do need to monetize a lot of the revenues, but the thing is, that looking at the numbers, revenue, core subscriptions, they're all up 30-odd% numbers. So the actual subscription revenues, some of the fundamentals are starting to come into play.
All right, well, our market, as I was talking about with Mathan, didn't quite get the big impetus boost that we saw on global markets overnight, but we did end positively. So let's have a look at the market leaders today. I'm actually going to bring you some different stocks that I wanted to bring your attention to. Block and Borrell did really, really well. These are, of course, US exposed stocks, and Clarity Pharmaceutical also rebounded from heavy selling after President Trump said he's on the brink of signing an executive order to cut US prescription prices. Let's have a look at some of the laggards today as well in the session. It's kicking it off with Australian Strategic Materials there, and looking at the small end of the town, although I have a feeling a lot of those were the small end of the town. Jupiter Mines, there you go, up 36%, Citi up by 21%, and flipping the board again there. Looking at the small end of town, Pan-Continental Energy down 14.3%. All right, let's have a look at what we're expecting tonight. US CPI, the headline and core, could lift by about 1/3%. The US NFIB Small Business Optimism Index for April is due, and also some US earnings, including retail. So Under Armour is out today. Be interesting to see whether or not we're still spending big on athleisure wear. Tomorrow, we have the wage price index, 0.8% growth expected for the March quarter. Lending indicators as well for the March quarter, and value of homes expected to dip potentially by 1.2%, while CBA comes through with a quarterly update, and we also hear from Aristocrat Leisure. Let's have a look at where the market has finished higher there by 0.4% on the CBO 200. The ASX 200 up 36 points, 0.4%, 8,269. And I think we might have had a glitch in our system earlier when we we're trying to look at the leaders and laggards on the ASX 200. So I will just quickly go through them for you. Clarity Pharmaceutical, as I mentioned, it was up 17%. So this is on this big boost that you've seen coming through in tech players. PolyNovo, of course, came through with that positive update on its treatment for diabetes. Life 360 was very solid, up 13%. That was after it came through with a positive quarterly update. And corporate travel, to the point that I was making with Mathan as well. We have seen a lot of downgrades in the travel space, but we are now starting to see a turnaround. The downside in the ASX 200 were Genesis Materials, Capricorn Metals, Perseus Mining, West Gold Resources and Regis Resources. So again, that switch out of the resources sector. Great conversation I had with Henry Jennings from Marcus today earlier that you can find on the website about that. And of course, you can find all of our interviews, ausbiz.com.au. We'll be back live from 9:45 a.m. Eastern again tomorrow. See you then.